Mastering Emotions, a personal playbook. This guide offers practical strategies for managing emotions in investing and life, drawn from personal experience and extensive research. While not professional advice, these common sense approaches have proven effective for me. Please remember, I'm only 18 years old and still learning, so I might have made a bunch of dumb mistakes in this piece of work. I'm human like everyone else, and I'm not here trying to pretend I've mastered the art of dealing with emotions. Disclaimers apart, let's get into it.
It's just what I do when I'm out, so try not to hold me down, feel alive.
Well, there's a very simple structure. Firstly, we'll go about explaining the theoretical foundations, like the essential concepts about human nature and emotional management. Secondly, we'll go into the Experimentation Lab, which are actionable techniques for immediate application. And thirdly, we'll go into the investing part, taking what we learned and apply it to everyday stuff in investing. This is a living document, evolving as I continue to learn and refine these vital skills. Join me on this journey of emotional mastery where we'll explore time-tested ideas and experiment with practical solutions. Part 1. Theoretical Foundations. Before diving into practical techniques, it's important to understand the underlying concepts that govern our emotions. In this first part, we'll explore the theoretical foundations of emotional stability. By grasping these core ideas, you'll be better equipped to manage your emotions in both life and investing. You know, I've been thinking a lot about emotions lately. It's a fascinating stuff, really. Here's the thing. Everything we feel, all our emotions, they are not some mysterious force. They're actually just chemistry in action. Our brains and nervous system are like little factories, pumping out chemicals that make us feel certain ways. Now, don't get me wrong, I'm not saying emotions aren't real or important. They absolutely are. But understanding where they come from can help us manage them better. It's like most of our emotional responses are learned. We've been conditioned to react certain ways to certain things. And if we can learn them, we can unlearn them too. It's not easy, mind you, but it's possible. Take fear, for example. It's probably one of the most useful emotions we have. Back when our ancestors were out hunting holy mammoths or whatever, that gut feeling of, oh no, something's not right here, could literally save their lives. So these emotions, they're not good or bad in themselves. They're just there. And our job is to figure out how to work with them, not against them. I've been trying to come up with a strategy for dealing with emotions, and I've noticed a few things that seem to be true for most of the time. Let me share them with you. First off, our minds really don't like the unknown. They much prefer things that are familiar. It's like, hey, I know this situation, I can handle this. That's comforting for our brains. Secondly, our bodies are always trying to find balance. It's called homeostasis. Fancy word, I know, but it just means our bodies want everything to be stable and steady. Third, there's this part of our nervous system called the parasympathetic system. When it's activated, it helps us relax. It's like the chill out button for our bodies. And lastly, a lot of those uncomfortable emotions we deal with, be it worry, anxiety, fear of missing out, envy, or whatever, they're just often habits that we've picked up along the way. So, what do you think about all this? Does it make sense? Let me dive a bit deeper in each and every one of these important facts. The mind fears the unknown and loves what is familiar. I've noticed that people who handle it well seem to have a few things in common. They're not trying to control everything, just the stuff that's happening right now. They've kind of made peace with the fact that they can't change the past or predict the future. And when they're faced with a big problem, they don't look for one magic solution. Instead, they break it down into smaller, more manageable steps. Now let's talk about that nervous feeling we get before big events. You know, the one before an interview, a competition, or an exam. It's that fear of the unknown that gets us. And hey, it's totally normal. We all go through it. But I found some ways to deal with it that might help. First off, practice. I mean, really practice. Make that scary event as familiar as possible. If it's an interview you're worried about, do mock interviews with friends or family. When I had a big exam coming up, I went all out. I even had a software make exam noises. You know, walking around, turning pages, coughing, and whatever. After doing this over and over, by the time the real exam came, it felt like just another day. But here's the thing. Even with all that practice, you might still feel some nerves. That's where the second part comes in, reframing those feelings. Instead of thinking, oh no, I'm nervous, try telling yourself, I'm excited about this opportunity. It's a small shift, but it can make a big difference. It's like you're using that energy to sharpen your focus instead of letting it throw you off. I've learned a lot from watching Olympic athletes and other high-level performers. These folks deal with pressure on a whole different level. Many of them talk about still feeling nervous, but they've learned to channel those feelings into their performance. They focus on what they've practiced and tune out the distractions. Take Rafael Nadal, for example. He said he feels nervous before every single match. But you would never know it watching him play, right? He uses positive body language to take control of the situation and embraces those pre-match jitters. So yeah, it's all about practice and perspective. We might not be able to get rid of those nervous feelings entirely, but we can definitely learn to work with them instead of against them. Curious to know what you think about all this and if you found any strategies that work for you when you're feeling stressed or anxious. The body has a natural tendency towards homeostasis. So you know how our bodies are always trying to keep things balanced? Scientists call this homeostasis, but I like to think of it as our body's inner peacekeeper. It's pretty smart, actually. Now, when you're dealing with tough emotions, most of us tend to do one of two things. We either try to squash the feeling like, nope, not feeling that, or we distract ourselves. Hey, mindless scrolling on our phones. But here's the thing, neither of these really work in the long run. Trying to force an emotion away is like trying to hold a beach ball underwater. The harder you push, the more it wants to pop back up. And distraction, well, that's just putting a band-aid on a broken arm. The emotion is still there, lurking, waiting for you to stop watching cat videos. So what can we do instead? This is where that homeostasis idea comes in handy. Our bodies naturally want to find balance. It's not about staying the same all the time. Life's too messy for that. It's more about adapting to whatever's going on. The trick is to be a bit more like a surfer riding a wave. Instead of fighting the emotion or pretending it's not there, we can just, well, feel it. I know, it sounds too simple, but hear me out. There's this popular fancy term, mindfulness, but at the end of the day, it's not about clearing your mind or becoming super zen. It's about noticing what you're feeling without beating yourself up about it. Like, I'm feeling anxious right now. That's really interesting. It isn't some new age mumbo jumbo. It actually goes way back to Buddhist teachings. They talk about thoughts and emotions like waves in the mind. The idea is don't try to stop the waves. Just let them come and go. Don't get too bothered by them. And I quote, "Don't attempt to forcibly stop your thoughts. Allow them to come and go freely. This approach avoids the disturbance they may cause. Understand that these thoughts are merely your mind's waves. By not being troubled by them, they will naturally settle into serenity within a short period, typically 5 to 10 minutes. This is a note I took from Zen Mind Beginner's Mind. There are also other coping styles, like problem solving, where evaluation, whether it's more effective to alter the stressor or your perception of it, takes in. Or you have also emotional acknowledgement, which is simply admitting that you're emotionally affected, can reduce the stress, which is really similar to what we just saw. And thirdly, we have social support. Leaning on relationships and social networks can alleviate stress. Flexibility in switching strategies is crucial. As Antonovsky, a pioneer in health research, emphasized, effective coping involves both fixed rules and adaptable strategies. Often, when traditional coping methods fail, trying something new is necessary, even if it's challenging. Stimulating the parasympathetic system helps relax. Now let's chat about something pretty interesting, our nervous system. Don't worry, I'll keep it simple and fun. So there's this part of our nervous system called the parasympathetic nervous system, or PNS for short. Think of it as our body's chill out button. It's all about rest and digest. You know, those times when you're relaxed and your body is just doing its thing. Now, why should we care about the PNS? Well, it's like your body's energy saver mode. It helps keep everything balanced and running smoothly. Remember that homeostasis thing we talked about earlier? The PNS is a big part of that. Here's the cool part. There are some super simple ways to give your PNS a little boost. First, we have deep breathing. It's like a massage for your vagus nerve. Don't worry about what it is, just know it's important. Secondly, we have relaxation techniques. Think meditation, yoga, or Tai Chi. Basically, anything that helps you unwind. Thirdly, we have physical comforts such as massages, warm baths, anything that makes you feel cozy. Then getting enough sleep, your body loves a good snooze, and eating well, even digesting food can help. That is why during times of stress, some people tend to put on weight. And then we have cold exposure, which, if you're feeling brave, splash some cold water on your face and try a cold shower too. And finally, we have hanging out with people you like. Good vibes are good for your PNS. You might have heard about some of this before. That's why things like meditation and cold showers have been all over the media lately. They really can help you feel more relaxed. Personally, I'm a big fan of breathwork. There's this cool technique called Wim Hof breathing. I also enjoy a good power nap. Typically, 15 minutes to 1 hour is the ideal. But everyone's different, so you might find something else works better for you. One last thing, don't stress about trying to do all this perfectly in a to-do list style. Remember the 80-20 rule? It suggests that 80% of your results come from 20% of your efforts. So focus on a few things that work for you and do them consistently. Keep the rest in your back pocket for when you need them. I'm not a scientist, so I highly recommend watching the crash course video linked down below in the description. Most emotions, such as worry, FOMO, envy, and others, are a product of habit. The chains of habit are too light to be felt until they are too heavy to be broken. Said Warren Buffett, obviously. You know, it's funny how our emotions can become habits, right? Not just that. Our other habits can actually make our emotions stronger or weaker. It's like this big interconnected web. So let's talk about some basic stuff that can really help us manage our emotions and stress better. It's not rocket science, but it's super important. Firstly, let's skip the smokes and go easy on the booze. Your mind and body will thank you. Secondly, get moving. Exercise is like a magic pill for stress. Thirdly, try to keep your weight in check. It's good for your overall well-being. Fourth, look after your mental health. Depression is no joke. Fifth, if you're married or in a relationship, work on keeping it warm and stable. Good relationships are like emotional armor. And sixth, develop a resilient way of coping. Be outgoing, connect with people, and try not to sweat the small stuff. Now, let's dig a bit deeper and talk about how we can spot and break those pesky emotional habits. Let's use worry as an example because who hasn't been there, right? First, you've got to figure out if you're stuck in a worry loop. Ask yourself questions such as, are you always putting off living in the present because you're anxious about the future? Do you spend a lot of time dreaming about a perfect scenario that never seems to happen? Are you constantly regretting things from the past that you can't change? When you wake up, are you excited about the day, or does worry cloud everything? If you find out you're caught in a worry habit or any emotional habit, the next step is to accept it. Don't beat yourself up. Just calmly think about how you can improve things right now. It's about taking control and actually doing something, not just spinning your wheels. Here's a simple problem-solving approach. First, what's the problem? Second, what's causing it? Third, what are all the possible solutions? And fourth, what's the solution you think is the best? Lastly, it's all about your overall attitude towards life. Stay active, think about probabilities, don't waste energy on unlikely stuff, accept the past, try to be cheerful, be grateful, judge yourself by your own standards, and make relaxation a habit. If you can do these things, you're setting yourself up to handle pretty much any emotional habit that might be dragging you down. Part 2. Experimentation Lab. To the man with only a hammer, every problem looks like a nail, said Charlie Munger. Now that we've laid the groundwork by understanding the theory behind emotional stability, it's time to move from concept to action. In the next section, we'll step into the Experimentation Lab, where you'll find practical techniques you can start applying right now. These strategies are designed to help you experiment with and refine your emotional management skills in real-world situations. You know how sometimes it feels like your brain is just a jumbled mess of thoughts? Well, a bunch of really smart people have some pretty cool ideas on how to deal with that. Let me share some of the highlights with you. First off, have you ever thought about literally getting out of your head and into your body? Samin Nosrat, she's a chef by the way, says doing something physical can be super grounding. It could be as simple as taking a walk or hitting up a farmer's market. For her, jumping in the ocean is like hitting a reset button. Pretty cool, right? Now, here's a wild thought from Naval Ravikant. He suggests remembering we're all gonna die someday. I know, sounds a bit morbid, but hear me out. It's about putting our daily struggles into perspective. Suddenly, that thing you're stressing about doesn't seem so huge anymore. Oh, and get this, Bosama St. John swears by power naps. Just a quick snooze can help clear your head. I don't know about you, but I'm all for any advice that involves napping. There's also this neat trick from Graham Duncan. When you're stressed about something, ask yourself, what's the worst thing that could happen? It's a way to challenge your fears and look at things more rationally. Now, if you're feeling overwhelmed, Saman Chainani has a hot take. You probably need either exercise or to rethink your commitments. And if you're feeling unfocused, it might be because you're afraid of failing. The trick is to push through that fear. Jesse Williams, yes, the actor, has a great question to ask yourself. What would you do if you weren't afraid? That's pretty powerful. Some folks find writing really helpful. Richard Chada suggests journaling to get clarity. And if you're not into writing, how about meditation? A bunch of people mentioned it, including Patton Oswalt, who says it's the best thing he's ever learned. There's so much more great advice here, from reading poems to taking walks in nature, from cold showers to making lists. The key is finding what works for you. I will post some of the original advice in the appendix. It would be too much to fit in here. So whenever you feel like experimenting something new, you can just do a checklist and try each strategy. Part 3. Investing. Having explored both the theory and practical techniques for emotional management, it's time to apply these insights to a critical area where emotions can significantly impact outcomes, which is investing. In this section, we'll see how emotional stability plays a pivotal role in successful investing, and I'll share specific strategies to help you navigate the emotional challenges of the financial markets. You know how Warren Buffett says emotional stability is super important for investing success? Well, he's onto something there. Let's break down some key ideas about emotions and investing. First up, we've got this cool concept from Ian Cassell called the pendulum of emotions. Imagine your emotions swinging back and forth like a pendulum, from super optimistic to totally pessimistic. It's like when the markets are good, we're all sunshine and rainbows, ignoring any red flags. But when things go south, suddenly every little thing seems like a disaster. Sounds familiar, right? Here's the thing, we're all human, and our brains love to play tricks on us. We tend to see what we want to see in the market, which can lead to some pretty wonky decisions. It's like wearing rose-colored glasses one day and doom and gloom goggles the next. So what can we do about it? Well, first off, just knowing this happens is a big step. Once you realize the market is often more about feelings than facts, you can start to see things more clearly. The real trick is finding that sweet spot between being too optimistic and too fearful. It's like being the calm in the storm. When everyone else is freaking out, you're the one keeping your cool. Here's a fun idea. Try being a bit of a contrarian. When everyone's super excited about a stock, maybe that's the time to be a little cautious. And when everyone's running from the hills, well, that might just be your chance to find a great deal. Now let's talk about the 14 stages of investing psychology. It's like a roller coaster ride for your emotions. First we have optimism. Well, you're feeling good buying stocks based on hunches. Then excitement, things are going well and you're pumped. Then thrill, you're on the top of the world, feeling like a genius investor. Then we have euphoria, this is the peak. Maximum gains, but also maximum risk. And then comes anxiety. Ooh, these things are starting to turn. Then denial is just a temporary dip, right? Fear, where reality hits and you realize you might not be as smart as you thought. Then desperation, trying anything to recover those losses. Then comes panic, total loss of control, not a fun place to be. Then capitulation, you give up and sell everything. Then despondency, swearing off investing forever. Then comes depression, lots of regret but also a chance to learn. And the last two are hope and relief, where you cautiously look at new opportunities and the markets are turning around and you're back in the game. Obviously, this isn't a bulletproof rule. It doesn't happen like this for everyone, but the key is to recognize where you are in this cycle. Are you at the I'm a genius stage? Maybe time to be a bit more careful. Feeling totally hopeless? That might actually be the best time to find great deals. Remember, successful investing isn't just about numbers. It's about managing your emotions too. It's okay to feel these things, but the trick is not to let them control your decisions. What do you think about all this? I wonder if you have ever caught yourself on this emotional roller coaster. Now let's get into more specific emotions and cases we are faced with when investing. Fear of missing out. Alright, let's dive into this FOMO stuff. It's a big deal in investing and I bet you've felt it before. I know I have. So FOMO, fear of missing out, it's like when you see everyone jumping on a hot new stock and you think, oh no, I'm gonna miss this boat. It's that nagging feeling that you're going to be left behind while everyone else is making bank. Here's the thing about FOMO, it can make us do pretty silly things, like buying a stock just because it's going up, without really knowing why. It's like jumping on a moving train without knowing where it's headed. Sounds scary, right? Let me tell you a little story. Back in 2021, a lot of folks were making quick profits left and right. It seemed like you could throw a dart at the stock market and hit a winner. But then 2022 rolled around and boom, things changed. All those FOMO-driven investments, yeah, they didn't look so hot anymore. So how do you deal with this FOMO monster? Well, this smart investor called Mavix came up with a cool trick. He calls it the quick list. It's like a shopping list but for potential investments. Here's how it works. Firstly, you jot down the names of companies that catch your eye. But, and this is key, you don't do any research right away. You let some time pass, maybe a few days, maybe a week, and then, if you're still interested, you do your homework. It's like letting your food cool down before you eat it. You're less likely to burn your tongue, or in this case, your wallet. Mavics is all about playing the long game. Be cool with missing out on a quick 10 to 20% gain if it means making a smarter decision in the long run. It's like choosing a steady jog over a sprint. You might not win the 100-meter dash, but you'll finish the marathon. Now, here's the cool part. You can tweak this strategy to fit your own style. Maybe your quick list is a notebook or an app on your phone. The important thing is finding a way to slow down these FOMO impulses. And remember, nobody's perfect at this. Even Mavic says he's always learning and adjusting his approach. It's like a never-ending game of financial Tetris. You've got to keep adapting as new pieces fall. So, what do you think? Have you ever felt that FOMO itch when investing? Alright, let's chat about overconfidence. You know that feeling when you think you've got it all figured out? Yeah, that can be a real trap in investing. So, overconfidence is like thinking you're the next Warren Buffett after a few good picks. It's when you start believing you can predict the market like a fortune teller. Spoiler alert, you can't and neither can anyone else. Here's the tricky part. Overconfidence usually sneaks up on you when things are going well. It's like, hey, I'm on a hot streak. I must be a genius. And before you know it, you're trading like there's no tomorrow and taking risks that would make a Vegas gambler nervous. Now, you would think it would be hard to feel overconfident when your portfolio's taking a nosedive, right? And you're spot on. It's when you're riding high that you've got to watch out. Maybe you've been outperforming the market for a while, or you've had a few big wins in a row. That's when overconfidence can start whispering in your ear. So how do we keep our egos in check? Well, it's simple but not easy. Isn't that always the case? First up, stick to your guns. If you've got a strategy that's worked for you over time, don't abandon it just because you're feeling lucky. It's like having a good recipe. You don't suddenly start throwing random ingredients in just because the last few batches turn out great. A good checklist can be a lifesaver here. It's like a reality check for your investments. Before you make a move, run through your checklist. It helps keep you grounded and consistent. And here's a humbling exercise. Keep a record of your mistakes. I know, it sounds as fun as a root canal, but hear me out. By constantly reminding yourself of the times you got it wrong, you're less likely to get a big head when things are going right. It's all about keeping that humility in check. Remember, even the best investors in the world make mistakes. The key is learning from them and not letting successes go to your head. Let's talk about fear in investing. It's something we all face and it can really throw off your strategy if you're not careful. Ian Cassell has some insightful thoughts on this. Fear can be like a fog that clouds your judgment, pulling your focus away from long-term goals and making you obsess over little things that could go wrong. This kind of short-term thinking can undermine the principles that make long-term investing work. When fear kicks in, it triggers a fight-or-flight response. Instead of thinking about future growth, you might start making decisions based on immediate survival, like selling off investments too quickly just to avoid potential losses. It's like reacting to a bump in the road as if it's a cliff. Fear also creates tunnel vision, where you only see the dangers right in front of you and miss out on future opportunities. This can lead to pessimism, where you stop focusing on picking good stocks and start trying to time the market, something that's rarely successful. Another effect of fear is increased trading. It's tempting to trade more to feel in control, but this often leads to chasing the next big thing instead of sticking to a solid strategy. While it might relieve anxiety in the short term, it's usually not great for your portfolio. As we gain more experience, you might collect some battle scars from past losses, which can make you overly cautious. While caution is necessary, too much of it can prevent you from taking the risks needed for real growth. Cassell emphasizes the importance of confidence in investing. It's like being a basketball player. You need to keep taking shots, even if you miss some. Confidence helps you stay in the game and not let fear dictate your moves. In the end, there's truth to the saying, scared money doesn't make money. While it's important to be cautious, letting fear control your decisions can keep you from making the gains you're after. Successful investing requires taking calculated risks and playing offense, not just defense. So, in short, fear can derail your investing by driving short-term thinking and excessive caution. The key is to stay confident, keep the long-term view, and not let fear take the wheel. Let's dive into some key ideas about maintaining a realistic perspective in investing. It's easy to get caught up in optimism, but Ian Cassell has some important reminders for us. First, it's crucial to have a long-term perspective. When we buy stocks, we often expect the business to perform steadily or even improve over time. But the reality is, businesses face setbacks more often than we'd like to admit. Instead of being constantly surprised when things don't go as planned, we need to be prepared for those bumps in the road. Stock pickers tend to have a bullish bias. We're naturally optimistic and often look for evidence that supports our investments. While optimism can be a good thing, it can also set us up for disappointment when businesses face inevitable challenges. It's easy to blame management when a company underperforms, but sometimes the problem lies with our own expectations. If we are too optimistic, we might set ourselves up for frustration. It's a good reminder to manage our own expectations instead of pointing fingers. Understanding business growth is key, especially with smaller companies. Growth isn't a straight line. It's more like a series of hurdles. Hiring, training, and unexpected issues can cause temporary setbacks. And as investors, we need to account for those challenges. Cassell also argues against relying on short-term guidance from companies. He believes it forces management to meet targets they can't fully control, which isn't healthy for the long-term growth. Without this guidance, we as investors need to form our own opinions and take responsibility for our expectations. When it comes to timeframes, patience is essential. Most successful investments take longer to pay off than we initially think. Cassell suggests adopting a 3-year perspective, giving businesses the time they need to meet and even exceed long-term expectations instead of focusing too much on short-term results. Finally, managing expectations is key. Cassell has a great analogy. Hold your short-term expectations like a tube of toothpaste, not too tight. Give companies some room to disappoint you in the short term and a lot of room to exceed your expectations in the long term. You can't control the short-term outcomes, but you can control how you react to them. Let's talk about loss aversion. It's that instinct we all have to avoid losses rather than chase equivalent gains. It's what makes us hold on to losing investments for too long, hoping they will bounce back, instead of cutting our losses and moving on to better opportunities. Warren Buffett put it best in his 1994 shareholders letter when he said, "You don't need to make your money back the way you lost it." And that's a crucial lesson. Once you realize you've made a mistake, the best move is to learn from it and move on quickly. It's like gardening. You wouldn't keep watering the weeds while neglecting the flowers. The same logic applies to investing. Often, we would be better off averaging up on our winners rather than trying to salvage our losers. But there's this common belief that we should buy more when something gets cheaper and trim our positions when they grow too large. While there are times when something generally does become a better deal, blindly following this rule can be really risky. The key is to stay rational and not let fear or stubbornness dictate your decisions. Sometimes it's better to let go and focus on where your money can grow rather than trying to fix what's already broken. Anchoring. Anchoring is when we fixate on a specific price or benchmark, like holding on to a stock just because we remember its past high price, even if the current market conditions or future prospects don't justify it. This one is tough to shake. especially since it feels like every time I research a stock, it suddenly jumps 10%. Though I'm exaggerating, it has happened a few times. The key to overcoming this is to have a filter in place. If there's not enough upside to justify paying a bit more than your initial anchor price, then maybe the opportunity isn't as great as you thought. For example, if something is priced at $10 but you believe it's worth $30, it wouldn't make much sense to pass on it just because it's now $12. Sometimes just doing the maths helps you see the right move clearly. But be careful, don't use this logic to justify buying at any price. It's easy to convince yourself that something growing at 20% over the last 3 years will keep doing so for the next 10, but that's not always the case. Confirmation bias. Confirmation bias is when we tend to seek out information that confirms what we already believe, ignoring anything that contradicts our views. In investing, this can lead to making decisions based on incomplete or skewed data. It's natural. When we are convinced about an investment, it feels better to avoid cognitive dissonance by focusing on information that supports our belief. But here's my take. You've got to put your thoughts out there, whether it's to friends on X, YouTube, or in a private community. Getting feedback on your ideas is crucial. Also, after you've convinced yourself that investment X, Y, and Z might double in 5 years, try flipping the script. Think about what could go wrong. If we make this kind of reverse thinking a regular part of our checklist and investment process, we stand a better chance of overcoming this bias. Herd behavior. Herd behavior is when investors follow the crowd, buying or selling just because everyone else is doing it, instead of relying on their own analysis. This can lead to amplified market bubbles and crashes. Ian Cassell, who focuses on under-the-radar microcaps, has a key rule. He prefers ideas that few others have discovered. This approach makes you more accountable because if things go south, you've only got yourself to blame. Plus, borrowing conviction from others is risky. If you're just following the crowd, your results are likely to be average at the best. Now, sourcing every single idea on your own can be time-consuming and tough, so it's not about ignoring ideas from others entirely. The important thing is to practice independent thinking. If your portfolio looks just like everyone else on Twitter or other platforms, you're probably not going to outperform the average. Instead, focus on doing your own high-quality research and forming your own opinions. That way, your conviction is truly earned. Now, here are some ideas that don't necessarily fit in a specific bucket, but are very useful. Be self-aware. The key to avoiding emotional decisions in investing isn't about eliminating emotions altogether. It's about avoiding decisions when we are overwhelmed by them. Before making any big decision, try using the HALT-PS mnemonic: hungry, angry, lonely, tired, in pain, or stressed. These states can make us poor decision makers, so it's wise to incorporate this check into your process. If you're feeling any of this, consider sleeping on it or addressing the issue first. Delaying decisions until you're in a better state can lead to much smarter choices. Another useful approach is to write down your emotional triggers. For example, if you notice that stress makes your throat tight or your eyes sore, jot that down. If you feel these symptoms while researching or deciding, it's a sign to delay your decision. It's amazing how simply listening to our bodies can help us avoid forcing decisions when the timing isn't right. Typically, stress and related emotions manifest in the upper body, neck, back, or head. I highly recommend using Journalytic to make sure you keep track of emotional cues. This leads me to another important insight I found. Delay decisions. The space between impulse and action is where we have the chance to engage our deeper, more rational thinking, what's often called System 2 thinking. If you read Thinking Fast and Slow, you know this. By widening that gap over time, we can practice delayed decision making, which is especially useful for tough decisions. Hyperactivity can seriously hurt returns. When we feel the urge to act quickly, especially in investing, we are more likely to make emotional decisions. For long-term investors, most opportunities don't need to be acted upon immediately. Waiting a bit longer, whether it's a few days, weeks, or even a month, can be a smart way to avoid hasty, regrettable choices, even if prices move upward in the meantime. If you feel like you're rushing through research to grab a seemingly great opportunity, it's probably wiser to wait. Sure, you might miss out on some gains, but more often than not, you'll avoid making costly mistakes. That said, it's important to remember that sometimes quick decisions are necessary. In other areas of life, procrastination isn't a good idea, so let's not use the delayed decision making as an excuse to avoid action when it's truly needed. Don't beat yourself up. Investing is a long-term, forgiving game. You don't have to be right all the time to build significant wealth. This reminds me of Roger Federer's commencement address at Dartmouth. He mentioned that he won nearly 80% of his matches. Not too crazy for one of the best tennis players of all time. But here's the interesting part. He only won 54% of the points in those matches. This highlights the power of consistency and persistence. Even world-class athletes and professionals in any field make almost as many mistakes as they do great plays. In investing, we should embrace this fact. It's about making small, incremental improvements without beating ourselves up over every misstep. You don't need to make brilliant decisions all the time. Most of the time, good enough is more than enough, especially if you can do it consistently over the long haul. Building wealth isn't about pushing yourself to the limit every day like a high-performing athlete. It's about sustainable progress. Good enough decisions made consistently can lead to extraordinary track records. Remember, investing is a forgiving game as long as you stay in it and don't get knocked out by trying to be perfect. We've covered a lot of ground, from understanding the theory of emotions to applying practical techniques in investing. As we reach the conclusion of this guide, let's take a moment to reflect on the key takeaways and how you can continue to develop your emotional resilience in both life and investing. In general, keeping life simple and predictable can help you stay grounded. It doesn't mean you shouldn't have fun or break the routine occasionally. But when life starts to feel hectic, stick to the basics. Say no to unnecessary distractions. Embrace an I don't know mindset. It helps you avoid overconfidence, challenge preconceived ideas, and dive deeper into your research. Starting with a beginner's mind can maximize learning, and seeking out this confirming evidence is crucial. Reward yourself when you dismantle a cherished belief, like Charlie Munger did. Remember, emotions are real but not always true, and part of being strong is acknowledging and discussing them openly. Don't check stock prices, let prices check you. It's also important to have a process you stick to, improving it only when something better comes along. Don't obsessively check stock prices, let them come to you. Set up alerts for significant movements like a 5% drop in a day or a 10% decline from a certain level. And check prices only when those triggers hit. Most of the time, everything else is just noise. This doesn't mean you shouldn't do maintenance on your investments. Just don't let price checking dominate your routine. Finally, write down your strategy for handling emotions like I just did. It's one of the best ways to improve. When emotions start to take over, go back to first principles and reread the classics as well as your own notes. This can help you better cope with and embrace your emotions. A lot has been covered here, but remember the 80-20 rule. You don't need to apply everything. As Charlie Munger wisely said, take a simple idea and take it seriously. Thanks for reading or listening, and I appreciate any feedback you have. Hey guys, this is originally a Substack post, so if you're interested in capturing all the relevant insights, plus getting access to the appendix with all the interesting resources I used, please check out the Substack post.